I want to share with you a story. Not too long ago, I met with a business owner, and we had just signed her up and provided working capital to her. And I was visiting with her, basically asking her, how is it going and how is it working out for you and so on. And she said, look, everything is as you promised, everything is great. But the most important thing, Carlos, is not the money, but rather what I think about when I get into the shower. And I look at her and I go, what are you talking about? And she says, once Capital Solutions BanCorp starts providing working capital, yes, I have money and I don't lose any more sleep because I can pay vendors and payroll and so on and so forth. But the most important thing is that whenever I have my, she called it thinking time, in the shower or at a traffic light or whatever it might be, I can focus my skills and my time in better servicing my customers and growing the business instead of wasting my time juggling cash flow to make ends meet. I thought that was very interesting because, yes, it's money, but what makes the biggest difference to an entrepreneur is what they're thinking about on a daily basis. And if they're thinking about, how am I going to make payroll on Friday? Of course, it's important, but they're not thinking about the new product or the new service or how they can better project themselves 3 years from now. And I contend that those small changes in what you're thinking about on a daily basis, once you project them, it makes a big difference to the future of the company and to everybody working there.
This is a special podcast with a special guest who is going to be talking about funding options for business owners who have a COVID-19 EIDL loan or an EIDL that's in default. One of the things that we try to do here and strive to do is to provide a level of curiosity for business owners who can become more proactive and organized to have different, more affordable, more flexible solutions for cash flow management. I want you to help me welcome Carlos Weil, who is with Capital Solutions BanCorp, and he is going to talk about how business owners can be more liquid and with it being more affordable and flexible so that they can meet their debt obligations with the government. We talk about bankruptcy and how that is not a one-size-fits-all solution. I think you're really going to enjoy this conversation and hopefully be enlightened with how to prepare for your business to be successful with a more solid foundation. Carlos makes himself very accessible, and there is contact information that you'll be able to gather from him on how to discuss your exact situation. So help me welcome Carlos. Hello, Carlos. Thank you so much for being here with us. And I know you are going to provide some comfort, maybe some relief and support for businesses, especially now with the EIDL loan, and most, if not all, the loans have already come into repayment process, and that has cascaded some troubles and struggles for business owners. And even though COVID was 4 years ago and they got the loan 4 years ago to survive COVID and lockdown, businesses still need funding. You and I and Trevor were all very familiar with some of the nuances and nonsense that could happen in the lending process, and people out of desperation might be seeking some solutions. And I wanted to break down how to avoid bigger pitfalls that could happen for these businesses. If we could start with, what types of businesses do you serve and do you help that you have found to be the strongest kind of sectors?
First of all, thank you so much for having me and inviting me to share this conversation. Big picture, we can help almost any B2B business, which means businesses that are selling to other businesses. So that includes distributors, wholesalers, manufacturers, service providers of all different kinds to other businesses, including medical and so on. What we cannot do is help B2Cs, meaning restaurants and stores selling to consumers.
That's very helpful because I know restaurants typically, they could always use an influx of cash.
That's right.
Thank you for differentiating that.
Yeah, all the big world of B2Cs with B2B, which is basically a business billing another business as opposed to billing a consumer. Yes, we can do all of those.
That's terrific. So let's move on to the types of solutions. And before we do that, let's really highlight and showcase how you have a pet peeve about this. We have a pet peeve about this. We've done videos about this. We've had to help businesses overcome the quicksand they got into, and that is with merchant cash advance type of funding. And typically we call them MCAs for
That's
short.
right.
We have a playlist dedicated to MCAs to help people be more proactive to not get strangled by this. Can you talk to
Yeah.
that and the solutions and maybe how this came about that you were like, we need to set some records straight here with businesses?
You're asking is for me to talk about MCAs or what other solutions are there?
What other solutions you have and why you wanted to do this and this passion you bring
Yeah.
with the lending because of what you've seen other businesses go through with the MCAs.
Let's see if a company is having trouble with their SBA loans. Let's first of all agree that there are two big groups. The first one is the PPPs that as were forgivable. Conversely, the EIDL loans are not. Many people, because they're busy or they don't read the fine print, they thought all those loans were forgivable. Again, they're not. The EIDL loans are expected to be returned. It is very important for a company to stay current with their EIDL terms. Once a company falls into default with the EIDL, things tend to start cascading from there and things get ugly really fast. Now that we define what is the issue, let's see what options a company has to stay current or get some working capital to solve those issues. The first one is I would say call you guys and see if there is some kind of hardship accommodation that can be negotiated. That is for sure. And we've seen quite a bit of what you guys do, and it's terrific because
Thank
it's a
you.
very good solution going to the lender and basically saying, give me a break, give me some time, and they will reduce the monthly installments substantially and for quite a bit of time. So that for sure is the first thing I would recommend. Call Trevor and Linda. Secondly, the other option is get a bank loan. That is always a good idea. We're going to discuss a little bit later. It is very important to get a bank loan before you fall into default with the SBA. Why? Because the moment that you're in default with the SBA, the bank option is out of the equation. In other words, the bank will ask the borrower, are you in default in any way, shape, or form with the government? And you got to say, yeah, I'm in default with the EIDL. And that probably rules out any new money, in other words, any new loans, or if you already have a loan with the bank, the company will be in what is called a technical default. In other words, it's in default because it was in default with the SBA. The bank is an option as long as the company is not already in default with the SBA. Then another option is friends and family. You can go to the famous rich uncle and see if the rich uncle is willing to help you go through the rough patch. That sometimes presents personal family problems and so on and so forth. Each case is different. Obviously, then it's our option. In other words, it's using our funding. And we're going to discuss that more in detail, why we think it's a very good solution. And finally, the last one, which I dread, is the one that you mentioned, the merchant cash advance, called MCAs in short. I cannot underline in big bold letters, this is a bad idea. Borrowing money from MCAs is a bad idea because they're so expensive that they suck out the equity of the company. And the only way to pay them back is to get another one and then another one. And by the time you realize you're determined the trade is stacked, in other words, you took out an MCA every month or every other month, and it's just impossible. I have people daily, Linda, daily say, I want out, I don't know what to do, and so on and so forth. Many of these companies have to go chapter because they just don't have a way. Yeah, it's pretty bad.
I want to take a break to unpack and digest a little bit of what you said. And also, because I know that's going to lead in nicely to where you might come in or might not come in. And I do want to speak to the business owners that we are very grateful that they watch our channel, they're subscribers to our channel. And what some business owners and subscribers of our channel may not know is that we were doing business financing prior to COVID. And we had a show called Finance Friday, and it was videos to help businesses understand the process before they embarked on this process. So
Sure.
they can get ahead of it with the lender and make smart decisions based on having the best terms available because they're prepared and they're organized
That's
and
right.
they're up to date and current. But so often people, they're flying by the seat of their pants, they're disorganized, they don't have the things the lender is going to require. And then that
Exactly.
just, so talk about cascading, which should be like the word of the day today with this show. My question to you, if businesses are stacking these MCA loans because they didn't know and they were too far along before they found information, you, insights, and all of that, and you said filing chapter and bankruptcy, are there scenarios where you have helped someone get out of this MCA situation? Were you able to get them, were
We,
you
we,
able to
we,
save the day?
we do that every day,
Oh,
literally every day.
music to my ears.
Yes, yes. We help them get out, and I call it wean themselves off of the MCA. We do that all the time. We help them negotiate with the MCA. They now have a source of working capital. The MCAs, believe it or not, do not object too much to us stepping in because we provide liquidity to the company. So there is a better chance of the MCAs being able to recover their money. So everybody wins, let's put it that way. The company is able to wean themselves off of a very bad situation
Mhm.
that is, may I use the word addictive
Yeah,
in the negative sense?
I would have used a
Um,
different word that was way worse. Yeah,
so the company can, get a new life, let's say. I do want to remind you that MCAs regularly require personal guarantees. So it's not only the company that is at risk, but it's also the personal asset of the owner that are at risk if the borrower defaults on those MCA loans. It is very important for me. From my personal point of view, it's success. I call it success when somebody can leave the MCAs and upgrade slowly but surely their borrowing acumen and make better decisions on the way they finance their company.
one of the things that I want to mention, and tell me if the technical aspect of a putting together a loan program, I don't know if I necessarily want to go there because I think if people are really interested in a position to get this kind of funding, they should just talk to you. Unless you think we have some time, what do you
No,
do that's
I,
so
I, I
magical?
I think that I like to stick to benefits as opposed to discussing features. Features are boring, and I like to discuss why this makes sense to somebody that is cash flow strapped and what is the risk of not doing anything. What happens to a company that decides not to do anything? I think
Let's go
I think
there.
that
I think I
that's
have that. Hold on. I do. I already have a banner, so we plan that.
well prepared.
I would rather you have dedicated time with somebody who is seriously having to figure out a different option for themselves.
Mhm.
But for right now, let's go to the scenario of someone not finding you and having this EIDL or any kind of financial struggle for their business. What happens then?
They definitely need to take it seriously. There are different solutions that we're going to discuss, but there is a substantial cost of not doing anything. And it really depends on the owner's appetite for going against the federal government when they're trying to collect from you. I would not recommend it. It's not my kind of fun to ignore the federal government when they're trying to collect. What are the consequences of, in other words, what does that cascade look like? If you're in default with the SBA, banks will not give you new loans. period, end of story. If you're in default with the SBA, your current bank loan is probably automatically in default as well. So the bank will very likely call that loan.
Wait a minute.
Um,
I'm sorry. I just want to make sure I'm understanding. If someone's in default with their EIDL,
mhm.
what did you said they're probably also in default with the bank loan?
Correct. Correct. Because first of all, when you're getting a new loan or the current loan that the company has, one of the covenants that 99.9% of the bank loans have is you are current with all your debts with the government.
Oh.
Okay. You cannot get a new loan. You can lie, but I don't recommend doing that. They will ask you, are you in default with any loan or monies owed to the government? And that could be taxes, or it could be SBA loans, or it could be import duty. It could be a whole host of things. But if you're in default with the government, then you cannot get a bank loan. And the current loan that you might have today, let's say that you have a $200,000 loan for the bank, that also falls technically in default because the covenant says that you are going to remain current with the IRS and the SBA and so on.
This is
It's
uh,
huge. It's a big problem.
this is so huge and I don't think we planned to also reinforce the fact that with the EIDL loan, you're in default not just for
That's right.
non-payment. There's a whole host of reasons a business owner can be in.
That's the cascade I'm saying. Things get worse from there, but it gets worse.
Okay.
You do not have access to any more SBA loans. In other words, you cannot get an SBA loan to pay off
It's another
a
SBA
previous
loan.
SBA
Yeah.
loan. So that's not. Now, let's say that the situation is really bad and you go, you know what, screw this, I'm going to go chapter. Okay.
Okay.
That it does not solve the problem because, as Linda, if you borrowed more than $200,000, your personal guarantee is there. Okay. So the government is going after your personal guarantee. So you say, okay, chapter does not solve the issue. I'm going to just sell the company. I'm done. Here is the problem. Selling equity in your company to raise money means that this is a fire sale. It's a feeding frenzy because the buyer that you might find, you have to disclose this. And
That's right.
there's a whole set of disclosures and so on. And the buyer will know that you're in default and you just won't be able to raise as much money as you thought you could. So selling equity in the company is not a solution either.
So I was involved in financial planning for 10 years and
Mhm.
it was with businesses, some families too, but my priority was business owners. And often along these lines that we're talking about, there were conversations about forced liquidation
That's
and the
right.
fire sale that you talk about. This is another reason that we wanted to host this with you and have you talk to these issues because we've been talking about the COVID EIDL since March 18th of 2020, and I think it sometimes can go on deaf ears and just be noise of the ramifications that follow for years. And even though bankruptcy can be a solution for some, it's not for all.
One size fits
Well,
all.
thank
Yeah.
you. It's not a one size fits all. I'm so glad that you brought this up. And my mission and our mission has been to get people thinking ahead of consequences and the forecasting
That's
of
right.
potential negative consequences. So
I
thank you.
call it second order consequences. In other words, it's not the action, not the immediate thing, but what happens then and what happens then after the death. It gets worse, believe it or not. In other words, there are situations, and this is debatable. It hasn't been tested in court yet, but it appears that the government, if they want to collect, they don't need to go to court to get a judgment. They can just garnish assets immediately. I personally believe it's unconstitutional, but good luck testing that in court.
I believe it. There's language in the loan agreement, and I think
That's
the
right.
one of the first steps that we started when they closed the program in May of 2022 was read your loan agreement.
Yeah.
and see how much latitude there is. Not to mention this loan agreement is archaic because it was the one that's been used for natural disaster loans. That's a different podcast.
Yeah.
But that brings me to, unless you want to finish a thought, I don't
Well,
want
just one more point, and I'm
to.
going to pivot on what you're saying. Read the loan document, and that is in the loan document. It says that the SBA can charge collection fee. Now, a collection fee, they don't state how much is the collection fee, and there are many cases I know for a fact was 30%.
Yes.
On top of the penalties and so on and so forth. Now, when you're talking 30% collection fee, we're talking MCA territory. It's crazy expensive.
And it's
So
completely legal to do something like.
absolutely, absolutely. So it is paramount, going back to the beginning, that the company does not fall into default with the SBA, because it cascades and it gets ugly.
Can we move to what seems like a logical progression of the size of the problem
Yes.
by the time they come to you? What are we looking at?
What I think that you're asking is, how big is this problem? How prevalent is the problem? There is an important article that was published in the Wall Street Journal, I think in early May of this year. That article said that the SBA provided about 390 billion with a B in COVID disaster loans to about 4 million businesses and nonprofit during the pandemic. Now, of those 4 million businesses, 860 of them, roughly a quarter, were referred as delinquent to the Treasury Department. As those loans are starting to become due now
Mhm,
and require payments, my imagination says is that the defaults are growing
mhm.
dramatically. So I can easily imagine that the defaults are several times that 25% or so. So we're talking about a huge amount of loans that are in default, mainly, may I say, because of what you said, that people are just, first of all, they think that they were forgiven, the same as the
Mhm.
PPP. And secondly, they didn't read the document. And then they realize that they're almost in default with the SBA.
Another aspect is that a lot of people don't even understand the 30-month lag of how that applies. If they got an increase, is it the second increase? Maybe they got a
That's
third
right.
increase. It's
That's
from
right.
the original loan date, because we talk about this ad nauseum, and that's because the SBA communications are lacking severely in
Clarity.
assisting business owners some clarity, because the business owners are running their business. They're not waiting around for SBA to get their act together after
That's
26
right.
months of disaster funding, and then now with the collection aspect of it. But yeah, the 860, that doesn't even account for the loans that haven't started in repayment.
That's right.
Now, I don't even know, what does size mean to you? Is it a dollar amount? Is
Well,
it a default
first of
amount?
all, it's very prevalent. This is the first point I want to make. In other words, there are huge amounts of people and companies in this situation. From our point of view, we're seeing a huge influx of companies that are having trouble cash flowing their businesses, because now they have to start making payments to SBA on their loans, and they have to, of course, continue paying vendors and making payroll. So cash flow is a big problem. Look, you can run a company at a loss for some time. Obviously, it's not preferable, but you can do it for a limited amount of time. You cannot run a company without cash. You just can't, because you need to make payroll. And even the suggestion or the rumor that you cannot make payroll will make especially your good people, leave first. So you can't afford not to cash flow your company. It's key.
So I think my question remains, as far as size, how do you define size? What
Yeah.
does size mean?
So companies come to us for working capital, and let's say the smallest size we take on is usually $100,000. Less than that is just usually covered by savings or friends and family and that kind of stuff. So $100,000 is the floor, and companies come to us for 200, 300, 500, several $1 million in working capital. That's what we do.
That's very helpful so that they know that there's at least a minimum problem before you can really come in and provide some solid guidance and counseling.
Sure.
So then that leads us to, what does this mean for the client to have this available? And knowing that there are terms, and one of the terms is a contract period of time. How are businesses affected with a solution you provide?
Let me perhaps amend your question a little bit, if I may. Perhaps highlight what are the important things that we bring to the table. The first thing is from the cost point of view. Let's boil down to the bottom line. We're probably the cheapest and most flexible option available to a stress EIDL borrower. If the company can go to a bank, as we discussed earlier, absolutely that's the way to go. But if a bank is not available or the bank is maxed out, then for sure we are the cheapest and most flexible option. The other benefit that we bring to the table is getting ahead of a default with the SBA. Because as we discussed before, once a company falls in default with the SBA, automatically a whole bunch of things happen and they're not positive. It's a default with the bank, losing access to new bank loans, etc. Another interesting aspect is that we will fund a company from what is called a junior position, meaning we do not have to be seniors, which is a requirement for all other lenders. In other words, banks and factoring companies, etc., will require to be senior. We do not require that. That means that we will fund you from behind the bank, from behind an SBA. You can keep those relationships and you don't have to forfeit them.
I want to clarify one thing. Can someone, because you had said once you're in default with the IDL, you'll be in default with other bank loans. Does that impact how you can assist a business owner if they're already in default with their EIDL?
No, let me clarify that.
Okay.
When we step in and provide working capital, we provide, let's call it oxygen. We provide this oxygen for the company to have more time to be able to renegotiate eventually with the SBA or with the bank and get accommodations, a workout, etc. That is the key. So to answer your question specifically, the fact that they're already in default does not prevent us from stepping in.
Thank you for clarifying that. Okay. So now the next question that I think I would have if I were listening to this would be, how much you answered the 100,000.
Yeah.
Is there any other nuances about qualifying for an
Yeah, of
amount?
course, of course. There is an underwriting process. Just to give you an idea, the underwriting process takes roughly about, I would say, a week or 10 days. I want to contrast that with what a bank typically, a normal bank takes. They usually take 60 to 90 days to give you an answer, and then probably another 30 days to close the loan and fund. So you're looking at least to 90 to 120 days with a bank. And quite frankly, many companies don't have that much time. So our turnaround time is usually about 10 days. With regards to your specific question as to how much money we can make available, it really depends on probably one big single issue, and that is how much do you have in open receivables? We base our facility on AR, on receivables. To the extent that a company has receivables to be collected, we can give them money. The beauty of this is that as the company grows, the receivables typically grow, and we automatically can give the company more money. It doesn't have to go through another underwriting or approval or anything like that.
That's fascinating and a relief all on its own, so that they're not having to perform, if you will, for
No.
more money. It's like are coming to you with their hat in hand. So now what do I do? What else do you need? So that's wonderful.
It grows and eventually can shrink. Some companies are seasonal and they have a lot of receivables during a certain period time of the year, holidays or whatever. So it goes up and down automatically. depending on how many receivables the company has. You asked me a question a few seconds ago with regards to whether we tie up our clients for any time.
Mhm.
And I want to address that. When you get a loan from a bank, it's typically for a certain amount of time. It's a 1 or 2 year loan and so on and so forth. And sometimes they even early termination fees or stuff like that. I want to make it very clear that we don't have any of that. Our clients can leave at any time, no questions asked, no penalties for several reasons. First of all, if I would be on the other side of the desk, I would never sign a term contract with somebody because I don't know how they're going to perform. So I don't want to commit myself to a 1 or 2 year contract. And now I'm stuck if it doesn't work out. So
Mhm.
I like the fact that our clients can leave at any time because that forces us to be on our toes to make sure that our clients are happy. If the other issue is we perfectly understand that we see ourselves kind of like a stepping stone. In other words, we see ourselves as helping our clients until they get a better solution, be it a renegotiation with the SBA or another bank loan or whatever it might be. That relationship could last anywhere between a few months to many years. We have clients for 15, 20 years that decided to stay with us. Great,
Mhm.
fantastic. But the important thing is you don't have to if you don't need to.
That is probably also another relief that they're not tied into
Absolutely.
anything with, because again, going back to the three-letter word MCA, I think there's a
That's
lot of
right.
restrictions that go
Right.
along with that. And also, I think with MCA, what people may not understand is that is always considered a last resort or no resort. That's how bad it is. And I think there are business owners that could avoid that if they just maybe become a little bit more curious and proactive and organized.
We are going to sit down another time and I'm going to bring a napkin because the calculation can be done in a napkin. And I can easily show you in less than 5 minutes how the rate that they're paying to an MCA is triple digit. We're talking 100, 150% APR. Now, here's the kicker. There is no company that I know that is operating legal stuff, not illegal stuff, but normal companies, they don't have 150% gross margin.
That's right.
So there's no way a company can afford MCA.
It's
Period. End
true.
of story.
End of story. But this is not the end of the story because I want people to continue the conversation with you. And how can people find you to get in
Yeah,
touch with you and to maybe investigate a little further and apply
sure.
their professional situation to you to see how that might work?
I like to talk to people and just get the information straight up from the source. Let me just give you my cell number, and that is 239-822-9906. And when you call me, you don't have to prepare a lot. I will ask you to briefly describe the situation. And the good thing is, I will be able to tell you on the spot whether, in principle, we can help or not. In 3 minutes, 5 minutes, you can get an answer of yes, this makes sense. Capital Solutions can step in and help.
If someone maybe has a little bit of phone phobia as an initial contact, is there a website or somewhere that you can direct them
Sure.
to check you out?
It is Capital Solutions BanCorp, BanCorp. Let me give you my email as well.
E before I,
Yep.
except after Carlos. Okay, great. So we have Carlos's phone number and we have Carlos's.
Email address.
This will also be in the show notes and on the video description for people to get in
Super.
touch. Is there anything I haven't asked that you think would be
Um,
paramount for business owners to understand?
Look, there is no need to suffer. This is like my message. I so often talk to companies and they go, where were you all this time? And it breaks
Mhm.
kind of breaks my heart because it's basically telling me that I'm not doing a good job telling the world what we do. But we got 2 or 3 inches of testimonial letters of people saying this worked for us and we stopped doing it because we got a line of credit, a bigger line of credit or whatever. And for me, that is success. Then we did our job.
I love how you have no ego about about that you don't have to be first and it doesn't have to be the biggest and that you're there for
I'm
them.
here
Like
to
you said, a
serve.
stepping stone.
I'm here to serve and to help them to the next stage. There's plenty of business out there. I don't need to keep it all. For me, meeting a client or sending them a birthday chocolates after 5 years after they left us, and then calling and catching up and sending pictures of grandchildren, that's what I enjoy doing.
I love that, Carlos. Thank you so much for joining us. Thank you for
My
so
pleasure.
much for sharing for people to know more about what their options are and lesser expensive, more affordable, more flexible, less
That's right.
restrictive. So thank you so much.